following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Doug in New Jersey. Hey, Doug, what's going on?
Hey, Tom, how are you, sir?
I'm doing great. You having a good day out there?
Absolutely. That's my job.
There you go, man.
Tom, I just got your new book, and got to say, anybody who does technical analysis has got to buy your book. And further, it's the biggest bargain on the face of the earth, and, people will just throw money at anything. But I would only suggest that people have got to read it. It's a must-read.
I appreciate it.
And now, here's Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Assume nothing. In any kind of relationship, you can make the assumption that others know what we think. And we don't have to say what we want. We assume they're going to do what we want because they know us so well. If they don't do what we want, we feel hurt and said, how could you do that? You should know better. Bottom line, folks, get rid of the grayness. Keep it black and white. Market-wise, let's take a look at it out here. We had the Dow down 54, NASDAQ off 34, S&P's off 8, gold contract up $1.60, trading at $1,587. Silver up 30 cents at $38.46. Platinum up $13 at $1,767 an ounce. Copper down a penny at $4.38 a pound. Light sweet crude down $2.30, trading out at $95.74. Bonds down a point at 125.21. Dollar index off a tick at 75.53. Euro down 2 at 141, and the yen up 17, trading out at 79.15. Our phone number is 877-927-6648. Just call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We are at 1308. It gets to 1306. You're down $8. You're going into the 30th of June out here. I had 996 million. You're in there at 920. Up, down, all around. Wide price spread out here today, folks. You had a 20-point price spread in the S&P. Nice price spread. We did 920 million shares. And, bottom line, that's some volume on the way down. S&Ps. Dow Industrials. We go over to the Dow Industrials. We take a look at the Dow. Dow trades down $54. We are at the 12,437 mark. And 920 million going against that 996. Composite, NASDAQ composite. We go over to the composite. We look at the composite. What the composite does, she is down 34 points, that's no doubt. That's a good escalation on the way down. 1.9 billion shares going against the July, June 30th, which was 1.8. Now, putting all this still together. Well, yeah, let me go over to Google first. Google come out with numbers. Google, they beat their numbers. Google is trading up $50 right now. It closed at, 50, 78. Actually, it's trading up $55. Google closed at $528. It's trading at $584 and $584. This is how the numbers go. The bottom line number, revenue number, top line number, the estimate was $6.5 billion. They took in $6.9 billion, so they got that baby going. Their paid clicks, the estimate was out of the whole company, there was going to be 16.8%. It did 18%, which is saying that paid clicks are going up, and that's a good 12% rise, which is a good number. There's no doubt about that. Excuse me. The bottom line number, the estimate was $7.85. They came in with $8.74. So let's go take a look at where Google is right now. So she closed at the 528. The last expansion up there was at 550. She is trading out at 580 right now, which is going to not only put her over how she gapped down, it's going to put her right into the gap from, which is 594.74, which is the gap left over from April 4th. Now, what you want to do with this baby, folks, is this. What you're going to have Oh, boy, what you're going to have here. This is pretty intense, actually. Wow, this is really intense. You know what you're going to have here, folks? This would be amazing if that's what you're going to end up with. Yeah, it is. Okay, this is really unusual, and this is what it is. We talk about island tops and island bottoms. Now, most of the time when an island develops, that develops on a 1 or 2 day deal, not a deal that is a 4-month deal. April, May, June, July. 3-month deal. So what happens is this. Google had gapped down from $579 on April 14th to $530. Now what you're going to see is going to gap away, and it's going to leave an island bottom. The way you want to deal with that is, oh, this is going to be a tough one. The reason it's such a tough one is this, is that now we're at 592 with Google. The reason it's a tough one is that when you have an island bottom, you're going to have 2 gaps that are wide open. These gaps, the second gap here is going to be a $70 gap. The first gap on the way down happened to be 30. It was a $40 gap. You're definitely going to let it come back to the gap. It's going to be danger. That's the bottom line. Bottom line, that little baby wants to go topside, no doubt. Now let's get into the market, okay? So what you had bonds pulling back. The bond market, you talk about, what news-driven wise, folks, what we had out here today. Yesterday, of course, that was the first day. Well, we had the Fed minutes that came out let's see, on Tuesday. That was at 2 o'clock. When that came out, what was happening there, flat out, is that inside the Fed minutes, it said that, hey, listen, if we need more stimulus, we'll buy bonds. Bernanke went up to Congress yesterday. As soon as he's at Congress, he's saying that, yeah, we'll buy more bonds, okay, that, things aren't great. Well, what does he do today? He comes out today when he's testifying and says, no, we're not thinking of QE3. What that does ASAP is that it basically did a few different things. Let's go over to the gold market first, because what you had with gold is that gold was at a price point of $15.94. Right now is at the $15.87. Not the end of the world. 178,000 contracts. That's not enough. That's the real bottom line. So I suspect it's not going to be able to hold these higher prices. Bonds. What you had with bonds out here is that the correlation inside bonds came last night at 5 o'clock. Last night at 5 o'clock, you had Moody's turn around and put the Treasury bonds under review. What that did ASAP is put pressure on the market. A bond contract, 30-year, came down with 400,000 contracts today. That's trading out at 125.22. You'll see that. That's going to move right into the 122.05. Now, what gets real interesting today is this. So picture this. You had pressure on the market. The bond market was also down, which, on a logical thinking basis, that would make sense, meaning that Moody's are thinking of downgrading it, people are getting paranoid, they're going out of bonds. But what also happens, of course, is what? The correlation has been when markets go up and get green, bonds are going down and get red. So I was watching this today because we're short bonds. I said, this is going to be interesting how this plays out. In the context, now you're still coming into option expiration, and this baby still wants to bounce. And the paranoia is really huge out here right now. I talked 2 days ago about the downtick that came in. You don't have up markets with a downtick. That's what we had on Tuesday. It was an up market, and you had a decent downtick come in. Yesterday, we also had a decent downtick come in, minus 382. Well, today, folks, you had a minus 1519 come in. That is saying that simultaneously, okay, you had, well, first off, when you get a minus 1,500, those numbers come in when you have already come down 3, 4, 5 days, and there's no hope. And, of course, there's always hope. But that's when those numbers come in. When these numbers come in and it's this quick, it says that, no, it is not going to stay down. That's how deviant it is. They're counterintuitive deals, folks. So what I expect you're going to see out here, again, Google, there's always something. Google will help it along, is you'll get an option expiration tomorrow that will have some juice behind it. Our phone number is 877-927-6648. And I'm sure that the Bernanke deal, just give him another day. One day we're going to buy the bonds. Next day that, no, QE2 is not in the dice. Let's go and we take a look at Bank of America. BAC has some big problems, folks. BAC down 13 points today. Not that that's $13. Not that that's a huge amount. It's not. 13 cents, rather, sorry. But as soon as you went under this 1040, that's where this turns into a big problem for BAC. And I suspect, let's go over to Citigroup next, actually, because these banks are definitely in big trouble. Citigroup right now is down 45. You're at 39. She's going to be running into this 36.76. We'll see how she handles that 36.76 when we get down to those numbers. Over in Europe, what we had out here today is that you had the FTSE was off 1%. You had the CAC Carreau off 1%. If we go over and we take a look at Asia, you had Hang Seng last night was flat. Shanghai was flat. Some of the high volume numbers out here today. Come on, baby. There she is. Okay, we had Alcoa down 39 cents. You had Marriott Corporation. They came out with their numbers last night. That was down 245. Problem numbers. Applied Materials was down 17. We had this Capital One down 212. Intel was down 21. We had ConocoPhillips. They're going to split into two companies. That was up $1.21. We had Intel down 21 cents. Let's go over to Conoco for a second because you know it was amazing. This morning I was listening to Squawk Box on the way in, and they had Kali Farina on, and she was talking about, if you want to see something that is just absolutely amazing, okay, is that you have a woman that no doubt has been running huge companies, and what she was talking about is, well, factually, absolutely wrong. And this is what it was. She was talking about what they're doing is this, folks, is that they're going to separate the upstream from the downstream. So that means that, integrated-wise, they're separating the exploration part of the company. And she was saying that the exploration part of the company was the part of the company that one of the main reasons is that it costs more money now to explore, and it's more risky, right? And I thought I was hearing things. Okay, let me tell you something, folks. This is what the difference is. And now make sure you understand what industry we're talking about. We're talking about the oil industry. The oil industry, folks, okay, the way an oil well works is that they're exploring oil wells now, and their success rate is pushing 98%. Okay, this is not the wildcatters. This is not like exploring gold or exploring silver. It's not even close. The thermal images that they have inside oil, here, we'll come right back. And where do you see the payback, how quick it is in the oil business? That's where it's at. We're going to be right back.